Hey Legacy Traders, it's Tim with Option Legacy helping you build a legacy through trading. Guys, I was just at an event this past weekend and I realized something. Are you ready? I don't care about traders. What? Crazy. No, I'm not really passionate about traders. I'm passionate about people, and people are traders. The reason why I'm passionate about people is because I believe that we're all called to do something great, and that's why I founded Option Legacy, is to empower you, the trader, to be able to build a legacy through trading. Build a legacy through trading. Now, do I enjoy trading myself? I absolutely do. I really enjoy that technical piece to it, but more so, I love the freedom. Do you know that I've been able to see every first that my son's had? He's 2.5 years old, his first steps, hear his first words, his first jump off the couch, all of that stuff because I was able to have the freedom of trading, freedom of financial freedom through trading. And that's what I'm really passionate about, is helping you guys encounter that freedom. So let's go look into the markets as I share with you guys transparently my day inside of my portfolio. So I want to look here. We're really going to look at these three trades here: Disney, MDT, and V. VMW, if you've been following me any time, you know that this was a credit spread, and we had a short position. You can see this is long by the positive number here. We had a short position here to recoup this lost capital. We took in, what was it, 122. We took in, this was only a $23 loss, so whatever those numbers are. So VMW is just trying to die. It's only got 2 days left, and then it'll expire worthless. But we're really going to look at these top three trades here. Disney, we're in a bullish position, MDT a bullish position, and V in a bullish position as well. And so if you add up all these numbers together, it's something like 107. Divide by over here, it's 1123. So we're looking at a 9% return on investment in the day. This is unrealized gains. So you've got that, you see that, that's real, that's in my portfolio right now. Let's look at the markets overall. I'm loving what's happening in the market. So this is my synopsis. Obviously, we had the down pull and got out right around here, I believe. I was sitting in cash. Maybe somewhere between here, I started sitting in cash. Whenever stochastics came up and then went back down, I was like, okay, we need to sit in cash. And then it drops all the way down to the 200-day moving average. And we saw a huge gap up at the third day after the drop, and then it's been bouncing off that 200-day moving average. From a technical standpoint, it looks beautiful. RSI is moving upwards. Stochastics, both slow and fast, are moving upwards, and MACD is showing weakness. So my next target point for this is probably right here, this lower trend line, because old resistance becomes new support. You can think of resistance like ceilings and support like floors. So old ceilings become new floors, and old floors become new ceilings. So this was a floor previously, a support, and now we expect it to become a ceiling to hit right here, right around the 287. And then I'm honestly expecting this thing to bounce back down and then form a W pattern. Why am I expecting that? Let's go look at February, because this is what happened in February. It came down, it bounced up, came down, and then it bounced up again, and then it actually formed an M pattern. So it could do one of these. In other words, I'm not expecting a solid move to the upside, even though it's showing strength. I'm expecting some for it to move to that top side up there of this previous support, and then it should move to the downside. Hey Tyler, how's it going? Just going over the overall markets inside of the portfolio. So let's look at Disney. Disney also showed strength. We entered into this thing today, and it's just going to be we're going to look for a quick gain right here, all the way up here to this top side of the resistance, about 119, so about a $2 move. What's really cool is, look at this. Collective delta, we have 35 delta, so that means for every $1 that Disney moves up, we'll gain 35 bucks. So we're expecting Disney to move up into about $2, about $2.50, we'll call it $2.50, and so let's go 2.5 times 35. We're expecting to pull out $87 more out of this trade before we exit. So that's about $100 on a $500 investment, and maybe this happens in a few days. That's about a 20% return on investment. So I'm loving it. It's looking good for me. Let's look at MDT, and then we'll talk about where we're looking at exiting for that. And then MDT. So this is the top. It's looking so good. I think this thing has room to come all the way up here to about $100, just under $100, which is about we'll call it $2.50. And we have a little bit more. Oh, I did the delta wrong. No one caught me on this. Tyler, I'm so glad you think this is interesting. And then, so I told you guys on Disney that we had 35 delta. Collective delta, we have 173. So we're expecting a $2.50 move times 173 bucks, about $400 more on top of this. That'd be 100% return on investment. MDT, we're expecting another $2 move. We've got 133 collective delta. That means 260 bucks. We're expecting to grow on this, and it's already up $200 since entry. That's almost a 50%. So we're again expecting 100% return on investment here. V, let's go look at V. While I answer, Ron Williams says, how did you draw the support and resistance line? Cool. Let me share that with you. I'll do it on V since we're going to talk about V, and then I'll share with you. So V, before I show you the support and resistance lines, Ron, let's look at V. I'm expecting this thing to come. This is what I want to see. Let's zoom in a little bit here. I want to see this thing close above this orange line, which is the 50-day simple moving average. Why do I want it to do that? Traders use moving averages all the time as support and resistance, entries and exits. So it causes support. So moving averages cause price points pivots is what they're called. And so I want to see this thing close above 50-day moving average. If so, it can come up to about 151, which is a good chunk of change, about $9 movement to the upside. If tomorrow, if it begins moving down after hitting the orange 50-day moving average, then I'll probably look to exit this thing. So let me know if you have any questions about that. I'm going to answer Ron's question here about how to draw support and resistance. So to do that, let me just see if I can't make a simple chart here, so we can kind of get rid of all this kind of noise that you see here. Whenever charting, I think it's great to draw on naked charts, meaning that there's just barely anything. So down here, Ron, what I'm looking for is three, whenever you're drawing a trend line, which is a vertical line, you're looking for 3 points of contact. 3 points of contact. Now, can it have more than 3 points of contact? It absolutely can. The more the better, actually. And that's on a vertical. If you're drawing a side-to-side line, something like this maybe, a horizontal line, to draw support and resistance, you're looking for 2 points of contact. So let's zoom in a little bit there. So we got 1 point here, and then pretty close right here, all through this point here, it came up to that price point. And so all I need is really 2 candles at any given time hitting that line that I drew for horizontal support and resistance lines. You need 2 points. The more, like all of these candle bodies in here, just shows a stronger support or resistance line. So that's how you to draw horizontal. And then to draw vertical or trend lines, you're looking at 3 points of contact. Now, does it have to be to the exact penny? It doesn't. You also notice that each candle body has wicks. These little tails to the bottom, or tails to the top, those are called wicks. You can use wicks too, or you can use candle bodies whenever drawing a trend line. And so you're just looking for 3 points of contact. I will say that the candle bodies represent open and close prices, and those hold more weight. However, if you get pretty close to some wicks, that's going to work too. And if a wick comes down pretty close to it, doesn't have to be to the exact penny, but it's darn near close to it, that's going to be great. So whenever you draw those, you can see that whenever it breaks that line, you can expect a downward move. And look, it came down to it, that big move on the first drawdown day, and then it broke the line and it continued downward. So that gave us an indicator that, hey, from a technical standpoint, that this is going to move to the downside. And it has. And so anyway, so that's what I got for you guys. Let's see. We'll end on this. We're up 9.5% growth today. Guys, if you want to learn more about trading, Absolutely, come join me. Every Wednesday I host a live training where I share with you details, my 3 secrets on how I'm able to have the freedom that I do have while trading. It's all about you and building a legacy. What would it mean if you could see your first for your little son or your daughter? Or what would it mean if you didn't have to work 40 hours, but you could only work 20 hours and still financially not only survive, but thrive? Or what would it look like if you had the ability to travel with your family and friends anywhere you want in the world, where you have internet connection and all you need is a cell phone to be able to trade? Guys, so I'm going to be teaching you my 3 secrets. I do it every Wednesday at 10 a.m. Pacific Standard Time. You can register by going to optionlegacy.com and see me in there. I would love to help and to help you build a legacy because I'm passionate about you. It's all about you impacting those around you and those to come after you. So till next time, let's build that legacy, and I'll see you in the next video.